All right. It's the 7th of Feb. It's a Friday. It's NFP today. I'm going to get to the charts in a second. Okay, just a second. Just a second. Just a second. Yeah. All right. Okay. Yeah, we're good. We're good. We're good. All right. Let's look at the calendar before we start. We've got about just under 30 minutes, about 25 minutes to the NY Open. Uh, I'm not going to be opening any trades until NFP, so we've got plenty of time. We've got about 55 minutes until news, until NFP comes out. Yeah, so we've got about 55 minutes. So for the next 55 minutes, we have plenty of time to look at the charts, do the prep work, and be ready with our zones and see if we have any setups for NFP, either for NFP or 15 to 30 minutes after NFP. Okay. Right, so today the big one is NFP. That's it. That's all that's important. It's NFP. It's in 55 minutes for now, and that's all we need to remember, right? There's nothing else. Okay, just a second. Yesterday, right? We're going to take a look at it um, on the lower time frames, on the 30-minute, on the 4-hour, the 1-hour, and the 30-minute. But we did have the pullback because we have a bearish candle that closed yesterday, but it rejected 2850 and it closed above it, right? It grabbed liquidity. Look at that. Just like this candle, similar, grab liquidity. It's just like this candle grabbed liquidity, pushed all the way up. After it grabbed liquidity, we pushed up 760 pips, right? We've grabbed liquidity again, right? Now, we spoke about this throughout the week, about this is the high time frame liquidity grab. I said when price is trending hard, not when price is ranging, but when price is trending, right? When there's a high time frame liquidity grab, it's very likely that you'll see a lower time frame liquidity grab as well, right? Could be on the 4-hour, the 1-hour, the 30 minutes, right? Any one of those 3 time frames you can see it, and you'll see. I'll show you what I mean when we go down to the lower time frames. Okay, so basically on the daily, what's happened is there's nothing to the left. There's no price action to the left. So the next area is 2900. Now we've been speaking about these levels all week. We've been speaking about 3000 as well. All right. So these are the only levels, liquidity levels on the price chart right now. 2900, 2950, and 3000, right? Until we have a daily supply form or 4-hour, solid 4-hour supply form, which means on the 4-hour, what you want to see is lower highs and lower lows form, right? Consecutive lower highs and lower lows. So you want to see at least 2 of them, right? For price to keep going down. When you see that, if you see 2 consecutive ones, it's very likely that the daily candle will close bearish, a strong bearish candle in pushing down, and then we'll have more information in terms of supply. But right now, there is no information in terms of supply on the high time frame. On the daily, there is nothing, right? This is the daily time frame. There's nothing on the daily. We are on the daily. It seems like we're pushing to 2900. Now we're going to look the further down we go on the time frames, the more information we have on the charts. But on the daily, all that we see is 2900 next. Okay, so let's go to our trading chart. Okay, so before we draw the zones, talk about the zones, I always do a recap of the trade I took and then the setup idea that I gave, right? So the trade that I took, let's first talk about that. The trade that I took was the sells. It was the rejection. Let's go down. Yeah, let's just zoom in a bit. It was when price rejected the London high, which is that. Price rejected the London high. We came back. We created M30 resistance. Right there, we created M30 resistance. And then we started closing below the Asian low, right? And I said price is going to head down. And where would it head to? It will head to another liquidity area, the liquidity candle, the BRN, and the liquidity level further down, right? And that's exactly what price did. So I think I took sell somewhere around here, and then I got out around maybe here. I think I took one further up as well. The furthest one was about 100 pips, and then I think about 80, 90 pips, I think. About 90 pips, 80 or 90 pips, right? Is where I got out. But price dropped, made a massive drop with NYSE open, right? I didn't anticipate that because price was very slow and made a huge dump. That's 150 pip candle, a single 15-minute candle, 150 pip candle, right? Massive drop. And dropped even further, another 95 pips, right? And where did we drop to? That's what's important. We dropped to the liquidity candle. Perfect. That's why we draw these. That's why I spend time drawing these, because that's exactly where price will reverse. Precisely, exactly, always. Grabs liquidity. Price moves from one liquidity level to another liquidity level. If you understand this, and if you learn to identify them on a price chart, you're halfway there, right? Then all you got to do is manage risk when you have a losing trade or when price goes in drawdown, and you can be a consistently profitable trader, right? It sounds simple. It's not. It takes time. You got to give the process time, but there is a path. You got to stay on that path, right? Understand liquidity, how price moves. Understand the concept of liquidity, how price moves. Learn to identify liquidity on a price chart, right? And that's why, yeah, why is it two? Okay, all right. That's why I keep bringing this back up every day. These are areas of liquidity, 5 areas of liquidity that I identify, that I look for on a price chart. There may be more. I don't know about what more there is, but these are the 5 areas of liquidity that I look for price to grab liquidity from on a price chart, right? If you're a session trader, all right, and a price grabs liquidity from them and moves up. So yesterday, I did give out a buy setup. I said sells unlikely to work out, but I did give out a sell in case price pulls back, wait for M30 resistance, and then price to drop. But I said I favor buys. I favor buys. I said buys, and watch the last 10 minutes or watch the last 5-6 minutes of yesterday's stream. If you want to see the setup ideas, the ideas that I give out, the setups, the precise, very accurate setups that I give out, watch the last 5 to 10 minutes of any stream, right? That's when I give out the ideas. And then come back the next day or 2 hours or 3 hours later after those ideas are given and see if price plays out the way I said it would, right? If it does, then that gives you confidence to take a trade, all right, and earn while you're learning how to earn while you're learning price action. So I said wait for M30 support to form from a liquidity area. Price tapped into this liquidity area. We formed support, right? This candle right here. This was the pullback on the 30-minute time frame. Stops. A more aggressive stop loss would be under the M30 candle that created support. The safer stop loss is always under the liquidity candle, all right? So that would have been an amazing trade. Took it, and where would price go back to? The liquidity candle, right? That's where we go back to because we've already tapped. We've tapped this BRN on the way down, so we should head back to the liquidity candle. Once we grab liquidity candle, right? So that was a great move up, moved about 240 pips up, and it might go further. Now we've tapped that liquidity candle, and price has kind of um, has evened out. Okay, now let's go back to this. I spoke about this daily liquidity grab, daily candle liquidity, and I said throughout this happened on Tuesday. Was it Tuesday? On Monday. Yeah, on Monday. This happened on Monday. Monday, Tuesday, Wednesday, Thursday. Yeah. Was it on Monday? Third. When is the third? Third was a Monday. Yeah. Yeah. This happened on Monday. Once this happened, I repeatedly said, almost I think every day I said that watch for a liquidity grab on the lower time frame, the 4 hour, the 1 hour, the 30 minutes, one of those three time frames. And that's what we had yesterday. Right? It took about 3 or 4 days for it to happen, but we had it. This is that liquidity grab on the lower time frame, right? For price to push up, and price did push up 240 pips. Now, now the question is, here's the next question. Is this liquidity grab enough on the lower time frame? Because we've already done it on the higher time frame. We've done it on the high time frame. It needed to happen on the lower time frame, so it's happened now on the lower time frame. It happened yesterday here. So this happened on Monday, Tuesday, Wednesday. It happened here on Thursday. Is this enough to push price up to 2900? 340 pip move up to 2900. Is it enough? That's the question, right? Now, how we would know is when we start seeing price action or candles close on the lower time frame, on the 30-minute and on the 15-minute. Once you start seeing M30 support form or 1 hour support form, and we start seeing M15 and M30 candle structure, then we'd know that that is enough for price to move up to 2900. Okay, so we're going to get into, I don't want to get ahead of myself, but we're going to draw our zones and see what price could possibly do today during the NY session, right? Now, I don't I hate having a bias. I hate having a bias, right? Like this looks like price is heading up, but I hate having a bias because I can't assume things. I have to go by what I see on a price chart. So we're going to draw our zones and see where price is. Is there a supply zone that it's going to break? Is price at demand, at 4 demand? Okay. All right, let's get rid of all of that. Price came through all of that. Okay. All right. That's that 4 hour zone. We haven't broken the zone, right? Price hasn't gone through the zone yet. So I'm going to extend. The first thing I'm going to do is I'm going to extend this to the right. Smooth this label across. Now we've gone through most of the liquidity candle. The liquidity candle was about a 67 pip candle. We've gone through about 50 pips into it. So we've crossed the 50% mark. So I'm going to delete that liquidity candle, right? Once it crosses the 50% mark, the liquidity in that liquidity candle is consumed. At least I consider it to be consumed, right? Majority of it. So if price comes down, it's very unlikely that that candle right there that we had drawn yesterday would hold. Price will go right through it. Okay. So, and also, price has gone a lot through this. So this is maybe not a high liquidity zone anymore, but we've formed new demand here. So we're going to take a look at that. Let's move this label to the right. Okay. So let's start with the most obvious one. which is that. Okay, so we have a rally, a base, and a rally. Let's put in the numbers there. 555043. 5043. Okay. Then we have a demand level down here. Now we've formed, there's a drop and a rally. So there is a demand level created here. Let's go down to the 1 hour because I want to always see that base, right? Just don't see it on the 1 hour also. Go down to the 30-minute. Yeah, there we go. That's clearer. That's a drop, a base in candle, and a rally. Why is this the base in candle? Because this candle has more, the collective wick of this candle is greater than the body of this candle. Okay, so we're gonna mark that. Okay, so now we have new demand there. That is 4-hour demand, though I've refined it. I have adjusted it on the 30. I've kind of fine-tuned it or refined it on the 30-minute, but it is 4-hour demand, right? Because it's visible on the 4-hour. You have a drop and you have a rally. Now, so that we don't overlap the zones, let's bring this down here because that's all that is left. Oops. That's all that's left of the zone. So this low is 428. Okay. The close is 467. Perfect. Okay. Right. Now, we're going to take a look at this zone because there's a BRN running just underneath it. So when price, I've said this many times, when price stops here, which it has on the 4-hour, it has stopped here and then continued, but it's done that just above the BRN. So I want to take a look at the 1-hour and see if there is a zone right at that BRN, right, where the BRN runs through the zone instead of under the zone. So go down to the 1-hour. Yeah, and we have a rally there and a base, two base in candles and a rally. So we're going to extend this to that. There, that's better. And then there's another zone here, a rally, a base, and a rally, right? So instead of drawing two zones that overlap each other, I'm going to just cover that zone too. That rally, base, rally, and the rally, two base in candles and a rally. Okay, so I'm going to cover those two zones. They overlap each other. I'm going to cover those zones. So let's put the numbers on that. 813, close 54. 813. Okay, that's better. Now the zone runs, the BRN runs through the zone. That's better, right? We've covered that BRN, right? That's better. And this 4-hour candle has no bottom wick, which is the daily open. So the daily open, if you see, has no bottom wick. All right. So if price has to grab liquidity, it's very likely that we create a bottom wick before we head up on the daily. That's what we can anticipate on the daily, right? That if price is to head up on the daily, we first create a bottom wick and then head up. But on the 4-hour, when we consider the 4-hour and the 1-hour and the 30 minutes, then the story might be a lot more clearer. Okay. Right. So we got that. Now, just above here, we also have 4-hour support form and some sort of demand form here, right? So you have a drop and you have a rally just next to it. And there is something there, so we're going to mark that out and take a look at it on the lower time frame. Okay, let's go down to the 1 hour. Yeah, so on the 1 hour we have a clear zone there, right? We have a drop, we have a base and a rally, and that is a reaction to this. Hmm. Let's take a look at it on 30-minute. Yeah, this formed as a reaction to this, so I'm going to cover this area here, right? Cover that candle. The 30-minute. So this rally base rally, this is the source, and this is this sub this demand that formed here on the 1 hour is a reaction to this 1 hour demand, right? On the 4 hour, it's not clear. You can see on 4 hour we don't see the base, but we go down to the 1 hour, we have a base, and that's a reaction to this, right? So that is why instead of drawing two zones here that are just a pip away from each other, a couple of pips away from each other, I'm combining them into one. So the low is 781 and the close here is 089. Sorry, 1. The open is 225. Yeah, okay. 781. Yeah, it's good. Okay. So we've got 4-hour demand here. This is also 4-hour demand. Keep that there. Okay, and here also it's 4-hour. So I don't need that, should bring it there. That's fine. Yeah, all of these are 4-hour demand. Okay, done. That's demand. Now, let's take a look at, okay, this, let's get rid of this for a second. Let's get rid of this. Okay, so price hasn't come up here yet. Yesterday we did not come up there. So we're going to just extend this to the right so that I don't spend time redrawing that. I had done that yesterday. So if you watch the first 15-20 minutes of yesterday's stream, you'll see how that was drawn. We're going to extend the liquidity candle also to the right. And now let's just move this away. Okay. Now we have a rally and a drop here, right? And we have a zone form here as well, a rally, 2 base-in candles and a drop. So roughly like that, but we're going to readjust this on the 1 hour, right? So on the 1 hour, yeah, this is what it looks like on the 1 hour, right? That's what it looks like. And then we have we have a tap into that. Yeah, something like that. Let's look at the 30-minute. Can adjust it even further. That's the most recent supply, rally, base, drop, right? Yeah, so let me just explain that again. On the 4-hour, that's the zone. A drop, 2 base-in candles, and a drop. But price has tapped it several times now. So we're going to go down to the 1 hour to see what area of that is left. So that is the zone on the 1 hour. 1, 2, 3, 4, 5, 6 base-in candles. We spoke about this yesterday. The rally, 6 base-in candles and a drop. Price came yesterday in the London session, I think, or just in pre-NY, tapped it and dropped, came back, tapped it a second time, dropped, came back, tapped it a third time, and is dropping again, right? So that zone is heavily tested, a heavily tested supply zone, right? Um, so now we need to see what area of that zone is left. So that's the top of the zone, right? So that high is 337. Let's put those numbers in, 337. But on the 30-minute, we got to find the base of the zone, the bottom of the zone, right? Which is that's the most recent supply, a rally, a base, and a drop. So the close of that is 895. 895. Perfect. Okay. Right. That's the zone. Now that zone has been tapped many times. That's when we created the zone after this drop. 1, 2, 3, 4. 4 times. This is also price dropped here and pushed back in here. So we've tested that zone 4 times now. Okay. All right. So that's still a 4-hour supply. Right? That's also 4-hour supply. This is also 4-hour supply because that's originally a 4-hour zone, but that's all that's left of that zone. Okay. Let's move this to the right. Okay. That's done. Now let's extend this also to the right in case price drops down. Today's NFP, so we need to cover a wider area. Always remember that. That's 400. That's not enough. We'll have to look further down, right? Because NFP has a lot of volume. Price can wick down. It can push down and wick down for a liquidity grab to head up, right? And that you can have I've seen 300, 400 pip NFP candles, like a 15-minute candle, a 30-minute candle. That's like 300 pips. I've seen that happen many, many times. So we got to be prepared for it. So we need to cover a fair amount of distance, about 600 pips. I think that's good. Let's extend this also to the right. Yeah. I think we're good. Let me just save this. Yeah, I think we're good here. Yeah, the price has to get through all of this to come down here. I'll just extend this also. Since it's just there, since it's just nearby, we're going to extend that zone and that liquidity candle. Now, if you want to see how these zones were drawn, you'll have to watch previous streams, because I don't redraw every zone every day, right? These remain on my chart until they get broken, until price goes through them, right? Once price goes through a zone, then they get deleted, and I draw the new zones. That's 1 hour demand. It's a high liquidity zone. It's also 1 hour demand. It's a high liquidity zone. All right. This is also a high liquidity zone. Okay. Now the new zones that we've drawn are these ones, 1, 2, 3, right? So we're going to now take a look at these zones and see if they're a high liquidity zone. That's the next step in the process. So we've identified supply demand zones. Now we're going to check which of those are high liquidity zones and which are not, right? So let's start with the one of the, so this one was a high liquidity zone yesterday, but price has gone through it. That's all that's left. I think it has about 12 pips left in the zone. It's no longer obviously a high liquidity zone, but we're going to take a look at this one right here, the new zone that we drew today, right? So let's see on the 1 hour. Let's go down to 30 minutes. It's not clear. Yeah, so this move up here, the push up did take out, broke closed above 2850, and then eventually the move started here. So this is a high liquidity zone, even though this was the area that broke this supply, this drop, base drop was broken from this zone. the move started here, right? And because this is a liquidity grab, and because it's the origin of the move up, of the 360 pip move up, I'm going to mark it as a high liquidity zone. Okay, because eventually the zones that were formed from that took out these supply zones, right? Then this one is also a high liquidity zone because this is the zone that took out this supply, right? And then this zone here, yeah, so we've broken this supply here. There's a rally, a base, and a drop. That supply was taken out by this high that started here from this move up. So you can see if I put my crosshair there, you can see that that wick of that candle has broken that high. So this is also a high liquidity zone. Okay. All right. Okay. Next, this zone here, we're going to see. Look at that liquidity candle that we marked yesterday. I think it was this one. It was this candle right here. Yeah, I remember. It was this candle, right? This was the 30-minute candle that we marked yesterday. I want to see how far price has moved into it. So that was a 50 pip candle. Price has come 18, 20, yeah, 24, almost 25. It's come 50% of the way into it, right? I am going to mark the candle though. It's the same candle that we marked yesterday. I'm going to remark that candle. Let's look at the 15-minute. Yeah. Yeah, there is nothing else except that candle. Yeah, it's good on the 30-minute. 337,833. Now we've not crossed the 50% mark. We've not crossed the 50% mark. 337,833. 337,833. Yeah. So we've not crossed the 50% mark. Hence, I've redrawn it, right? Because that's a 50 pip liquidity candle. We've reacted to it several times, right? We can say, let's say, to make things easier, let's say 3 times. Yesterday pre-NY session, right? Exactly at pre-NY. Asian session today, and then again in the London session today, right? So pre-NY yesterday, Asian session today, London session today, all from that one liquidity candle, and price keeps tapping it, dropping. It tapped it again, dropped, right? 3 times, but it hasn't crossed the 50% mark, right? So that's about 24 pips. It's a 50 pip candle, so just at the 50% mark, right at the 50% borderline. So I'm going to still keep that. I'm going to mark that candle and leave it there. Let's look at this area again. 37. As high as 37. 47. Just to take it up. Yeah, that's better. So we don't overlap. So you see that those are 2 zones. That's another liquidity candle, and that's visible on the 5-minute, right? Sorry, on the 1-minute. Yeah, that was on the 1-minute. That's that 1-minute candle that we drew yesterday. Rarely, it's usually very rarely on the 1-minute, but that is a liquidity candle on the 1-minute, and it has price came back just over the 50% mark, and we dropped. So if you look at that drop, let's go down to the 5-minute. That drop that started there pushed 160 pips and eventually pushed about 420 pips in total. Okay, that's a failure. So price tried to came, grab liquidity from that 1 minute liquidity candle and pushed down. Now, because this price has come above more than 50% of the way, there is less liquidity there. If this, let me explain this very clearly. On the 1 minute, that's a liquidity candle, right? On the 1 minute, that's a liquidity candle. Price has come, price dropped over 100 pips, came back into it 30 pips, 31 pips in a 50 pip candle, roughly 50 pips. So we crossed the 50% mark, and then it dropped 160 pips, right? The initial move. I'm counting only the initial move, right? If we dropped 160 pips, right? Then we started coming back again. Anyway, so we've crossed the 50% mark of this candle. So there is less liquidity in this candle than there was before. A lot less, right? Just keep that in mind. Okay. Now, we've got our liquidity areas marked at the top. Okay. We still have time. We have plenty of time. We've got 20 minutes for news, NFP. Okay, now let's look at demand. If price comes into this area, this 4-hour support or 4-hour demand level that's visible on the 1 hour, if you come in there, is there a liquidity candle in there that can hold price and push it up? Let's go down to the one. On the 1 hour, we have only this candle, which is outside. Majority of the candle is outside the zone. It's only 20 pips inside the zone. Let's go to the 30-minute. Again, a major part of that candle is outside the zone, and a little is inside, but we've got this candle now, which is a 63 pip candle. Let's mark this candle out. Let's go down to the 15-minute. Still that same candle. Let's go down to the 5-minute. It's this candle right here. Okay, now it's clearer on the 5-minute. That's the largest candle. That's a 41 pip candle. There is no candle that's greater than that in the zone, right? Let's put the value on that. 278,864. 278,864. Okay, perfect. We're almost there. We're tapping into that, right? So we've created the candle, gone up, come again, crossed the 50% mark of that candle. Remember that, see? We've come deep into that candle. We just have about 3 pips left in that candle. It's come 38 pips into that candle, right? It's a 41 pip candle. Okay. Next zone. Here. Let's start again with the 1 hour. What's the largest candle? This one, right here. Pretty easy to identify that one. Okay, that candle right there. That's a 45 pip candle. That is 39. That is 39 also. Let's go down to the 30-minute. We're tapped into that candle already. Okay, let's look at the 30-minute. We've got this, which is 54, 37, 37, 38. Let's go down to the 15-minute. There's no liquidity in this area. Zone 34, 32. Yeah, there is no liquidity in this area. I don't know. It's not really, not on the 15-minute at least. 42. Maybe this one, 43. 33. 32. Yeah, this one right here. Price has tapped it right there. Yeah, this is the candle. That's the candle. And the BRN runs through it. Yeah, that has to be the one. 43, 35. Let's look at the 30-minute. Yeah, it's that wick. Yeah, I can live with that. Oh, the 5-minute. It's 28, 29, 25. Hmm. Yeah, that's better. 41. Hmm. Much better. This one. 270862. 270862. Okay. Yeah, that's the candle right there. That's a liquidity candle. Okay. So if we break this low, it'll drop another 62, say about 60 to 65 pips to this liquidity candle. That's the next area of liquidity. And in that is BRN, is the BRN 82850, the big round number or a psychological round number, which is another area of liquidity. So there are two liquidity levels here, right here, one inside the other. That price needs to get through this. So if it doesn't find enough liquidity here to push up, then it's coming down here. Okay. And that's why again, I say this every day. That's why I draw this, because we have a roadmap, right? This is like a roadmap. We know where price is heading next. If it breaks this low, this candle low, we know where it's heading next. It's coming here. Now, let's go to the next one. As I said, it's NFP, right? So uh, price will need a lot of liquidity. It might need a lot of liquidity. We don't know if the liquidity it grabbed yesterday is enough to head higher. If it didn't, then how far is price going to head down before it heads up, if it is heading up? If not, and price is going to be bearish, then we'll have to look at these zones where price will might push through these zones, right? But I favor buys. Honestly, I favor buys because we're very bullish on the high time frame. We're very bullish, right? So I'm looking for, basically what I'm looking for is a bottom wick on the daily candle, and then uh, price to eventually push up after the NY open, after the around the NYSE open, right? Or maybe even 15-20 minutes earlier, before the NYSE open. Okay, so this zone, let's take a look at this zone. On the 1 hour there is nothing, there's no candle there. Let's go to the 30-minute. On the 30-minute, it's this big wick, so you're going to mark this wick. Right, that's the wick. Let's go down to the 15-minute. Yeah, it's that big candle there. It's a 95 pip candle. Let's go down to the 5-minute, and it's that candle 59. But I'm going to take this full candle because I'm going to take the 95 pips. Yeah, because that candle has no bottom wick. If that had a bottom wick, I would have taken the 5-minute candle, So that's the reason I'm taking the entire 15-minute candle, right? Because a 5-minute candle has no bottom wick. It's the previous one's bottom wick that forms the 15-minute candle's bottom wick, right? So I'm taking the 15-minute candle. 386, 428, 386, 428. Okay, that's it. That's the analysis. We took a little time today because we have time for news. That's it. These are the zones. So if there is not enough liquidity here, okay, so here's the scenario. If price is to head up, it needs to grab liquidity to head up. If there is not enough liquidity here, it'll come to the next area of liquidity, which is this candle or the BRN. If that's not enough, it'll come to the next area of liquidity. If that's not enough, even further down, right? Once it grabs enough liquidity, it goes in the opposite direction. That's if price is heading higher. Okay. Now, got about 10 minutes more. Let's take a quick look at what price has done in the Asian and London sessions. Just save this. Okay, that's the market open right there. This candle right here, the market, the daily open candle price is 55.68, 2855.68, and that candle has no low wick. That's a daily candle open, right? It's on the 15-minute, but that's where the daily candle opened. So very likely that we break below this low to grab liquidity. Anyway, price pushed up, came down, created the Asian low here. $781. Okay, and then price pushed up. It's the Asian session. We created the Asian high. This is the Asian high. 052. Okay. And then price pushed down, created the London low. This is the London low right here. 898. Then we created the London high. So the Asian high and the London high exactly at the same price. Okay, just a couple of pips different. That doesn't make much of a difference. This is the London high right here. This high is 074. Okay. All right. So in the Asian session, price has moved 125 pips. In the London session, we've moved similar, about 120 pips, right? So similar moves in the London and the Asian. So what happened is price opened here, the daily opened here. Price moved up because yesterday we had grabbed liquidity in the NY session. So price opened and continued to push up with that previous day's volume, the NY session volume. We pushed up to the liquidity candle, rejected and pushed down. We grabbed liquidity, pushed down. Price came back, grabbed liquidity again, pushed down to the EMAs, grabbed liquidity from the EMAs, created the London low, pushed back up into that candle to grab liquidity, tried to come back and close above the Asian high, couldn't, push down again. right? So, and we're coming towards the London low again, right? So it's very likely that have we continue down maybe to the London low, but we are in demand right now, right? So we can't look to sell. We have to wait for news. I've got 7 minutes for news. Now with NFP, like other news events, I if I see a setup like yesterday, I did that, right? Yesterday we had, I think, news. Yeah, I took a trade. With NFP, I don't do that, right? NFP is far too volatile, far too volatile. You might have, there are some days, um, some months where NFP doesn't bring any volume, like barely has any volume, but that's very rare, but it does happen. But you can say 80% of the time, price is very volatile during NFP. So you don't want to get trapped in that volatility, right? So it's better to wait for price to maybe close the first 15 minute, or at least a 5 minute candle, or a couple of 5 minute candles, like the first 10 minutes to pass after news before doing anything, right? So we're going to wait. But because all of this analysis doesn't really mean much for NFP, because NFP, um, if you anticipate a very big move in NFP, then whatever's happening here, the price action that's happening here is irrelevant, because price can spike above this, grab liquidity and head down, or drop down, grab liquidity and head back up, right? So a price could be, so you have to assume always for NFP, just for NFP, assume that price is in the middle. Assume that. It's always a safer bet. Assume that price is not at an extreme. I'm a trader that I like to trade at the extreme. So what that means is, if I'm selling, I want to sell high. If I'm buying, I want to buy low, right? Now that seems very vague, but when you draw your zones, it makes sense, right? So this is the area that I want to sell from. These are areas that I want to buy from. That's what I mean, like buying low. But it's always assume that once you draw your zones, just before NFP, price is inside, in the middle. Assume that, right? Even if it is not, it's better to assume that, because NFP, as I said, price can just wick up or wick down. And that drop can be a 100, 200 pip drop, or a 100, 200 pip spike up, or a rally. It can happen in a minute, right? So you don't want to get trapped in that. So it's always safer to assume that price is in the middle right now, in between the two extremes, wherever those extremes are. If you don't draw zones, then you may not know what those extremes are. However you're trading, just assume that price is right now in the middle of those extremes, right? So do nothing. Just wait for 5, 10, 15 minutes after the news to see where price is heading, because it will head to an extreme, right? It's very likely. There is a 80-90% chance that price will head to one of those extremes to go in the opposite direction, because it needs liquidity. Okay, got 3 minutes to news. Just save this. Yeah, and I'll be back in a minute. Just need to grab some water. What numbers are they expecting today? Expecting 169. Expecting 169. Yeah, they're expecting low low jobs, less jobs being created. But if the numbers come out higher, then we might see price drop. So anything above 169, 169,000, we might see price push down. Let's see what numbers come out. Okay, this is news. Let's see what happens. I think we should drop, come down to grab liquidity. Let's see. Pushing up, pushing up, pushing up. It's pushing up. Yeah, we're heading higher. What are the numbers? 143. Oh, less than. So you should push up. You should push up. Numbers are 143. They're bad numbers. Bad numbers. Bad. 143. So we should push up. Gold should push up. But let's wait for that liquidity grab. Let's wait for that liquidity grab. Price should push up. We've tapped into the London high again. We've tapped into the London high again. Um, so that area now is consumed. See, now we've crossed the 50% mark. Remember that 50 pips? Now it's 30 pips. Price came 30 pips into it. It has a 50 pip liquidity candle. Now we've come 30 pips into it. So now we've crossed the 50% mark. Now that area has very little liquidity. Keep that in mind. That area has very little liquidity now. So if price comes back the next time, it's going to very likely just shoot through this zone, shoot through this candle, go right through it. And remember what I said about the zone above. This one too. Prices come here. We looked at it on the 1 minute. Prices come deep into it, right? Keep that in mind. We've crossed the 50% mark here again. So both those zones, okay, we're dropping. Got that drop. Nice. 131. 131 pips. We've gone through this. We've gone through the liquidity candle. Are we coming to this one? Are we coming to this liquid? I said once we break this low, the next area of liquidity is further down. It's down here. Are we coming to that? Seems like it. That's the daily candle low. I said we're very likely going to break that daily low. Let's go down go to the 15 minute. This one right here. This one right here. Said we're going to break this low. Here we go. There we go. We broke the low, the daily candle low, right? We're coming to this. I said once we break this, that's the next area of liquidity. That's why I draw these zones, because it gives an idea of where price is heading next. Okay, just wait. Got to be patient. I'm gonna keep it on the 5 minutes because I want to see. I want to see what because um, when you're trading a very high impact news event like NFP or like CPI, just these two, right? Ideally, these two news events. It's better to look at the 5 minute and the 15 minute. 15 minute is better, or the 5 minute, right? If you are comfortable with these zones and you keep you're confident about your zones, then you can look at the 5 minute. If you're confident about your zones, you can look at the 5 minute. Otherwise, the 15 minute is better, right? Because the 30 minute might be a little too late because these are high impact news events. Price moves very quickly from them. Look at that. We touched it, we're pushed up. Okay, we're gonna wait. I'm gonna open a buy here because we tapped into this. Just open a buy here. We tapped into that liquidity candle. We broke the daily candle low. Look on the daily. We created a bottom wick and we tapped into it. Okay, and we rejected. There's a huge wick there on the 5 minute. That's a very wide stop loss. Obviously, I'm going to manage risk if price starts to come down. But we tapped into this liquidity candle to the pip, right? Unfortunately, it didn't do it on the 5 minute, did on the 1 minute. But let's see if you can come back down. If you come further down again. And TP would be that candle is gone. So about 150 pips here, right? Maybe even here. About 200 pips up there. 150, 200. Let's see. Let's see if we can get there. I don't know. Let's see. Yeah. 145 to 185, nearly 200 pips. Let's see. This was very quick. It didn't even happen on the 5 minute. Usually, this kind of liquidity grab happens on the 5 minute, but this was so quick. I'd like to see price come back down, create a 5 minute bull candle here, and then push up. It's just happened on the 1 minute. Let's see if you can come down. About 175 pips. Let's see. Let's It doesn't seem like we're going to pull back again, and it just seems like we're heading higher. That was the grab. This usually happens on the 5 minute. I was anticipating a 5 minute bull candle here and then open buys to go up, but let's see if you can pull back again. I'd like to see it happen. I'd like to see price pull back to these areas again. If the 5 minute closes here, then we're just going to break the high and we're going to heading up to 2878. Yeah, just easy. Another 110 pips up. The candle is closing bullish as well. Yeah, we're pushing up. Pushing up. And we're going to push through this liquidity candle. This liquidity candle has been consumed. There's nothing much left in this candle. That's it. We crossed the 50% mark. When price came up, we crossed the 50% mark. No chance of a pullback. It's just heading higher. That's okay. That happens sometimes. It's fine. So I got my TP at about 175 pips from entry. Let's see if we get there. 2878. I think we should head higher. Yeah, we should head higher. Yeah, we should head. Yeah, we should head to 2900 today. Yeah, maybe even close. At least a 400 pips. It's gonna wait for the 15-minute candle to close. 308. 400. Where is 400? 2890. Yeah, let's have it around 2890. Open another buy there. That's good. Yeah, we're coming down to grab liquidity under this candle. That's great. Let's see. I want to see. Um, this is fine. This is a liquidity grab as expected, right? But I want to see now. We're rejecting the Asian low, the London low. We rejected it. We rejected it to the top side first. Now the bottom. See if we can head back up again. Okay, so that's a 15-minute close. We've closed to doji. Um, we've grabbed liquidity. We've broken below the low. The daily, we created a daily candle low. But I would have liked to see a 5-minute candle liquidity grab, but there isn't one here. So maybe we come down to create one. Let's see if we do. This is the 5-minute low. Should break that low. Yeah, we tapped that low. Tap the low. Tap the low here. See if we can head higher. I want to see a 15-minute bull candle close above the London low, right? Above that low, 15-minute or above the Asian low. That's when we have better confirmation the price is heading higher. We've rejected it, but we don't have a bull candle. Now, if a 15-minute bull candle closes below it, then we're heading down. Then I'm going to close my positions. What I'm anticipating is price to head higher, right? For that, a 15-minute candle has to close above these, above the London low, because we've already grabbed the liquidity. That's done. Price has grabbed the liquidity. It doesn't need to grab it again. It can come down to grab liquidity again, but if that happens, then I'll close these positions and I'll open positions further down. It doesn't make sense in holding these positions in drawdown all the way until price comes here, right? So But usually when this happens, when price wicks like this, it doesn't need to come back down, but it can. It can always come once, twice, three times, four times, all right? As many times as it needs to grab liquidity, enough liquidity to head higher, head in the opposite direction, if it is heading in the opposite direction, right? If it's going up. Now, but for that to happen, the confirmation is to see a 15-minute bull candle close above above the Asian low or the London low, a 15-minute candle close. That's a little more confirmation, not all the confirmation that's required, but a little more confirmation the price is likely now to head higher. We need to see the 15-minute candle close. The close of this candle, this 15-minute candle, will also be the close of the 30-minute candle and the 1-hour candle. So it'll be interesting to see how the 1-hour candle closes, the 30-minute candle closes. Let's see, right now they're all doji. The 1-hour is still looking like a doji, 30-minute is looking a doji, and the 15-minute is also still looking a doji. So you got to wait for that. Wait another 10 minutes. In 10 minutes, I'll decide if I'm going to keep these trades open or close all of them. Because if a 15-minute candle closes below here, below these wicks, right? Below that 15-minute support, which price rejected here and pushed up, came down, grabbed liquidity, pushed up. If we close a 15-minute bear candle here, comes down and closes a bearish candle here, that means we're heading down to grab liquidity again, right? So then it makes absolutely no sense in holding buys here, right? You rather close these buys, close it with a manage your risk, close everything, and wait for price to come down, grab liquidity, create some sort of confirmation on the 15-minute or the 30-minute, right? Maybe 30-minute support or 15-minute support, and then take the trade to go up, right? That makes sense. So we got to wait. Wait for 9 minutes for the candle to close. Let's see. Right now, there is nothing. There is no information at all because on the 1-hour, we're still a doji. 30 minutes, we're a doji. Even on the 4-hour, it's still a doji, right? You got to wait for about 8.5 minutes for the candle to close. So that's how I'm going to manage risk, right? It's a very logical way of managing risk. Price action based, uh, price action based on price action, and based on very logical rules, right? So if price couldn't close below these wicks, right? Now, if you have a 15-minute candle during high volume time close below these wicks, that means we're heading down, like this candle. It's pushing down. So if it closes here in the next 8 minutes, if it close down here, then close everything. There's absolutely no need to uh, hold any positions because we're coming further down. I'm gonna wait 7 minutes. Five, six, four. Four. That was the daily candle low, previous low that price stepped into. Waiting. Still ranging, nothing. We're still doji. 3 time frames are showing a doji. 1 hour, 30 minute, and 15 minute. They're all showing dojis. Let's see. It's got to wait another 6 minutes, 5.5 minutes. It all depends on this 5 minute candle. If this 5 minute candle closes below the London low, that's it. Got to close everything. Got to manage risk, close it. That means the 15-minute candle is closing below the London low, right? And that means the 30-minute candle is closing below the London low. Also, the 1 hour candle is closing below the London low. So it all depends on this 5 minute candle. You close below the London low, you got to close everything. Got to manage risk. Got to manage risk. That's the only way you'll keep your losses smaller than your wins, right? Even if you have a high RR system, it doesn't matter. You've got to manage risk. Never ever let price hit your full stop loss. Let's see, as soon as the 5 minute candle closes below the London low, I close everything. That's the London low right there. The low is 58.98. So basically 28, if you close below 2859, then you got to close everything. Right? That's a very logical way of looking at it because that means we're heading down. And then I'm going to wait after that for NYSE open. I'm going to do anything until then. I'm going to wait for NYSE open. And we're going to wait for confirmation. Right? Because right now we're ranging. You can see the EMAs, they're moving sideways again. Right? Price is not above them or below them. Price is right at them. So we went up, then we came back down, went back up. And if you look at the 5 minute time frame, we went up, we came down, we went up, we came down. So we're ranging. Price is inside the EMAs, right? This means we're just ranging. That's all it means. It means that price is not going up, nor going down. It's just spiking up, going back down, spiking down, going back up, right? So it's in that, I've always said this, when price is ranging, wait for a higher time frame confirmation. Wait for maybe an M30 confirmation is always better than an M15 confirmation. When price starts to range, always wait for higher time frame confirmations. There is no need to rush at all. Okay, we've got a minute and a half now. Let's see, this candle tapped into the London low, did it? Low, yeah, it tapped into the London low and it's rejecting. Let's see. If it in the next minute, if price drops and closes below, I close everything. But if we close here, if you close a doji, then I'm going to wait. Then the next candle will probably very likely drop again. Right? Then we have to wait for the next candle. Because if we, all it means if you close a doji, there is no information on this candle. There is nothing. There is an equal amount of buys and equal amount of sells. That's all it means. If it closes doji, got 50 seconds more for the candle to close. So if this 15-minute, if this 30-minute candle closes doji, then there is no information on that candle. but we have to wait for it to close. You got another 30 seconds. And if it closes like this, where it is right now, very likely that price is heading down, and before heading higher, maybe. Very likely, but we're ranging because it's like a bearish doji. Yeah, we're very likely going to close here. What is the 5-minute? The 5-minute also is a kind of a doji. 15-minute is also a doji. 1 hour is also a doji. It's nothing. It's no information. Yeah, so we closed there. 30-minute closed a bearish doji. 15-minute kind of a doji. 5-minute a doji. Nothing. No information. We have to wait. Again, same rules apply. If a 15-minute candle closes below this area right here, below these wicks, right? These wicks, so this open is, see, we're coming down. I said if you close like this, we're probably heading down, right? I need to see that 15-minute candle close. I cannot do anything until I see the 15-minute candle close. This open is basically below 2860.5, 2860.5. A 15-minute candle close, a candle has to close below that in these wicks here, in this range. If you see a 15-minute candle close here, anywhere below this line, then you close everything, because then that means we're heading down. We're closing below those wicks to push down. Yeah, we're coming down. It's got to wait 30 minutes. Got to wait for the candle to close. It's got to find another reason to manage, another way to manage risk. There's nothing. This is wick. This is a wick. This is a liquidity wick. So you got to let price come into that wick to grab liquidity. This grab liquidity pushed up. There's a lot of buying here in this wick. That's what that means. That wick means there's a lot of buying pressure. So you got to allow price to come into that wick, right? Got to allow price to come into that wick. Once I have a 15-minute candle close below this level right here, then that's it. Let's see. Seems like we're pushing down. Seems like we're pushing down. That daily wick wasn't enough. Seems like we're heading down, further down. Yeah. Let's see. Let the 5-minute candle close. If the 5-minute candle closes below the London low, then I'll close a couple of positions, because there's no need. There makes no sense to continue to hold drawdown when uh, it becomes less and less likely that price is going in your direction, right? Wait for the 5-minute candle to close. Might come back to 285564. Could be heading down. Yeah, yeah. Close a couple of positions. 5-minute candle close below the London low. I hate holding drawdown. Always hate holding drawdown. Yeah, it's best to wait for at least 15 minutes support to form. Just wait. Just wait. Wait. Just be patient and wait. For buys, if buy. Or maybe price is just heading down today. Maybe it's coming down. If it's coming down, then it's going to tap this liquidity candle as well. But right now there is no information chart. We're just closing dojis. The one eye is a doji. Price is moving up and down in the same area. But it feels like it's a larger move because there is a lot of volume because it's NFP. But if this was a regular trading day, this would be like a 50 pip range. Price would be bouncing in the 50 pip range. The range is just larger. Um, the range is 100 and kind of 120, 130 pip range because because it's NFP. On a regular trading day, this range would have been about a 50 pips, 40, 50, 60 pips at most. So we have no information right now for sells or for buys because we're just ranging. We need to see M15 or M30 support form for buys or yeah, have we created M30 resistance? We have created resistance right here. But that's a doji. It's a doji. Create a resistance, but it's a doji. Yeah, so here's a good confirmation. If a 15-minute candle closes above this resistance here, that's your confirmation the price is going to fill this wick and head higher. Wait for that. Wait for a 15-minute candle to close above this resistance that's formed. M30 resistance is formed here, right? You have a bull candle and a bear candle. M30 resistance is formed. Now wait for a 15-minute candle to close above this. That's confirmation that we're heading higher because then that means we have to reject the London low and London high to head higher. And then that's an opportunity if you close some positions to add that risk back on and to anticipate price to move higher. Wait for that 15-minute candle close above M30 resistance. A 15-minute or even a 30-minute candle close. 30-minute would be even better. That's more confirmation. At least wait for a 15-minute candle close. Until then, we're just ranging. There's nothing happening. The price is right at the EMAs. They're flatlining. They're just moving sideways. We had a spike up and a spike down. Yeah, 180, 190 pip. Wick. We'll open another buy here because of this touch here. Yeah. Mm. Yeah, wait for that 15-minute candle close above this. That's your confirmation that we're heading higher. 125, 252. 125, 252. Yeah, there we go. Wait for that candle to close. Now we're forming support. Wait for the candle to close. So this candle broke this low, this candle broke this low, fib, and we should head to 2890 at least. Then 2892, and then we should head to 2900 and 2908. Right? That's the anticipation that if there's a lot of volume, we should be heading there. We've done 187 pips today, so yeah, so we should head. How much is that? 400 minus 187, 213. Yeah, we should head to 2892, 2889, or I mean 2890 should be comfortable today. Let's see, because we've done only about 50% of the ADR. Got about another 200 pip move left, I think. Because the daily candles, again, we spoke about this week. The daily candles have been averaging about 400 pips, right? That's Monday. That's 584 pips. Almost 400, 380, just over 380. Again over 400, 425, 430, and this one also nearly 400, right? So 395. So let's see if we can head at least to 2875, 2878, and then 2880, and then 2890. I want to see that 15-minute candle close above this resistance. Don't want it to close a doji or a bearish doji, then we're heading back down again. I'm assuming this is the liquidity grab on the 5-minute, the one that I would want to see here. Didn't see it here, saw it here, it came here. That is why I opened another position here, because this was the candle that this was the candle, the NFP candle during news, just after news, that I wanted to see usually form. If you go look at a previous NFP, pick any NFP, when price grabs liquidity, it creates either a 5-minute bearish candle from that zone or a 5-minute bullish candle on that zone. This is what I was expecting to see, but that didn't happen. So now it came, it did it, and now it's heading higher. Yeah, we're pushing up now. And the 50-minute just closed bullish. That's confirmation that we're heading higher. So this is 90. Yeah, we should head minimum we should head to 2875. That's the minimum, 2875. I'm anticipating higher. Now you can see that we're rejecting the Asian low and the London low. So we should come to the London high again. Now when you come to the London high, for price to reverse here, there has to be liquidity here. And I said that that liquidity is very likely consumed. I think we've tapped it 5 times now, right? How many times have tapped it? 1, 2, 3, 4, 5. 5 times we've tapped it. We've tapped it pre-NY yesterday, Asian, again in the Asian, London, and now NY. 5 times, right, since yesterday. So the anticipation, the assumption is that there is no liquidity left in this liquidity candle, this 30-minute liquidity candle that we had marked yesterday, and we're going to go to the next liquidity candle, which is this. So the next liquidity candle, we anticipating at least 2875. Right, let's see if we can get at least a 2875. That'll be great if you can get there. It's 11, let's see, 12. Yeah, 13 minus 5. Yeah, it's okay. All right, how long have I been here? Yeah, so I'll be here for another 10 minutes more. Okay, it's a Friday anyway. I don't want to, maybe for another 5 minutes. Um, yeah, I'll wait for this 15-minute. Yeah, maybe wait for the 30-minute candle to close. 42 minutes for the 4-hour candle to close. Yeah, wait for the 30-minute candle to close. Okay, wait for 30-minute candle to close. Now, okay, 30 minutes is a better confirmation time frame, like I always say for session trading. So what I would like to see is a 30-minute close above this 30-minute resistance, previous 30-minute resistance. This is the one that caused problems previously, right? That's why price wicked in, couldn't close above this, pushed down. So when you have something like that, and that was created at the pre-NY session, so now it's volume time again, NY open volume time, NYS, we're getting into NYSE open. So if you have a 30-minute candle close above this, above basically 2867.5, 30-minute candle closes above this, then it's very likely that the next candle is going to break the high and continue higher. Very likely. Not a certainty, but a very likelihood of that happening, right? So you want to see a candle close above this. So this, let's put a price level there. 2867.5. Let's put 2867.5. Okay, yeah. Now you want to see the 30-minute candle close above this, right? It's okay if price pulls back. That's absolutely fine because it has to pull back. Price has to always pull back to create a bottom wick. That's how candles are formed, right? It has to pull back. That's fine. But you want the close is important. The close of the candle is what's important. The close of a candle. That's why I always wait for candles to close, right? So if I want to see the 30-minute candle close above this resistance, and you can see that resistance aligns perfectly yesterday with the pre-NY resistance, right? You have resistance formed there that was originally where it formed yesterday, and then we struggled at that 2867.5. We closed above, closed back below, closed above. Let me just zoom in. Let's go to the 15-minute. I think it's better. Okay, right? That's the 30-minute resistance right there, 2867.5. Now let's go down to the 15-minute. You can see price came up, closed above, ranged, closed back below, closed above, closed below, closed above, continued like this, again closed above, again victed, came, closed back below, closed above, closed below. It's struggling, you can see at 2867. So that is the same area that you want to see a 30-minute candle now close above it, right? A high time frame confirmation, 30-minute time frame for session trading, close above that key area where price has been struggling since yesterday. If we close above that, that's a sign that it's very likely that the next candle will probably pull down to create a bottom wick, break this candle high, and continue higher. So we got to wait for 9 minutes for the candle to close. If it doesn't, and it closes, if it closes at it, that's fine too. If it closes at 2867 or just a couple of pips under it, that's absolutely fine. That means the same thing, right? It's closing at an area that it couldn't close below, right? That's all it means. That's fine. But if you reject 2867 again, like we've done here, right? Just like it did with this wick, in the next 8 minutes, if price pushes back down and closes somewhere here, that means 2867 is holding again, right? So then again, I'm going to manage risk. I'm going to close some of my positions and manage risk again, right? That's the game. That's the game. Whenever there is, whenever the odds are against you, a little, even a little against you, you manage risk. You close some positions. Not all of them. You can always keep, you don't need to close everything, but you manage risk so that you will lose less. That's the whole idea. You lose less than what you intended to lose. Now, I didn't know price is going to go up, so I closed my previous two positions. Was that a bad? Was that a good or a bad thing? In hindsight, it's a bad thing, right? But then trading, there is no hindsight in trading, right? Price could have easily gone further down to grab liquidity again. I said that can happen as many times as it needs to. Price can move down or move up to liquidity candles as many times to grab liquidity, right? So I was not willing to hold drawdown. I think the positions were higher, somewhere here, I think maybe. I was absolutely, there was no chance that I was going to let hold drawdown all the way down. So I closed a couple of positions. I didn't close everything. I closed a couple of them. Seven minutes more. Let's wait. So um, if let's wait for the let's wait for the last 5 minutes, because then if okay, last 5 minutes, we've got a minute and a half, 2 minutes for the candle for last 5 minutes. Okay. So here's the deal in terms of setups for the next 2 to 3 hours. Okay, here's the thing. If the 30-minute candle closes above 2867.50 or at it, that means we're bullish for the NY session, right? For the NYSE session, we're bullish. So it really doesn't make sense in trying to sell here. Okay, it doesn't make sense at all. We're bullish because if the 30-minute closes above a level that it couldn't close below, it couldn't close at before, that means we're very likely going to head higher if it has to close above 2867.5. If it does, then we're bullish for the next at least 2 hours, hour and a half or 2 hours, we're bullish, right? And if you want to get in on the buys, then wait for a pullback, and that pullback will come when the 4 after the 4-hour candle closes. The 4-hour candle is going to close in what, 30 minutes from now, 35 minutes from now. Wait for that 4-hour candle to close, right? Seems like we are heading higher now. Yeah, we're pushing up. Okay, that's fine. What did I? Yeah, I'm holding at 2878. Let's see. We should get there. Yeah, so we're going through the liquidity candle just as anticipated. No liquidity in this candle anymore. We should break it and we should head to 2875. Let's see if we get a reaction there on the 5 minute. If we don't get a reaction there, then I'm going to hold for 2878 and then 2880. Yeah, yeah. That's my final TP around 320 pips, but it could go to 2900. There's a lot of volume today. We could head to 2900. But if we get to 2892, if we get to 2892, that'll be a 400 pip candle. That's fine. Should be. Yeah. That should be easy today. 400 pip candle should be easy, right? So final TP is around 325 pips. Okay, so again, going back to the idea, okay, how did the 5 minute candle? Yeah, we closed bullish. Okay, so it's very likely. So now that the 5 minute candle has closed above the London high and the Asian high, it's very, very, very likely that the 30-minute candle is going to close bullish, right? Above 286750. It's very likely. The 5 minute candle has already confirmed on the move up that we've closed above the London high and the Asian high, and that this liquidity candle has no more liquidity. So we're going to push through it. So which means the 30-minute candle now there's a 90% chance or a 95% chance that we're going to close above 286750, right? When that happens, that means for the next hour and a half at least, we are heading up. We're bullish, right? So if you didn't get in on buys and you want to get in on buys, wait for the 4-hour candle to close. Once the 4-hour candle closes, it's very likely that there will be a pullback. But you might have to take a trade after M15 support forms and not M30 support forms because there's a lot of liquidity. And I've said in high volume time, when there is a news event like NFP or CPI, price might not um, range for too long to create M30 support. You might have a pullback, M15 support form, and boom, price pushes up again, right? So it's a little riskier trade because you're trading off the M15. You're waiting for M15 support rather than M30 support, but that might be the case because price is very bullish, and we are now very likely we've tapped 28. We've gone through the liquidity candle. We've tapped 2875. That was the minimum level that I said price should tap at, and we've tapped that. So the move, you can count the move from basically the liquidity candle. So that's a 225 pip move because that's a liquidity candle that we had identified today on the 5 minute time frame. Look how perfectly price tapped that to the pip. This low is 2852.52, and if we look at our 5 minute liquidity candle right there, look at the high of that candle is 2852.7. So by less than 2 pips, 1.8 pips, we tapped it and pushed straight up, right? 225 pips up. Let's see if we can head to 2878. That's my partial TP level, 2878. The reason I have 2878 because that's M30 resistance right there. That's new. That is a fresh M30 here. M30 resistance right here. There's M30 a candle right there, and there's M30 resistance just underneath that. You can see a rejection right here, right? So I'm anticipating volume to push up to head into that liquidity candle because we've come, as I said, more than 50% of the way this pullback. Let's see. It all depends on if I get a rejection here, then I'm going to very likely close some positions. But I want to see the rejection on the 5 minute. Ideally, on the on the 1 minute there is a rejection. But we should break this. This candle is a weak candle. Yeah, I'll wait for price should come up and break this. Yeah, we tapped this for the first time. Price has not been to that candle. We tapped it for the first time and there's no bottom wick now. The 30-minute candle is closed bullish. We should pull back, might pull back. Yeah, we're going to pull back. We're rejecting that 2875 again. So let's see if there's a bearish candle, 5-minute bearish, strong bearish candle close here below 2875, I might close a couple of positions. I'd like to see price get to another 30 pips to 2878. Okay. All right. So yeah, very likely we're going to pull back here, right? There is no bottom wick here. Very likely price is going to pull back, probably back to the Asian high and London high, right? That's fine. But the 30-minute candle has closed above 2867 and above the London high and Asian high, so that's fine. So again, the trade idea for the next couple of hours are buys, not sells, right? Not sells, buys. Uh, because we are very bullish, prices grab liquidity from this liquidity candle. Yesterday, the 30-minute candle grabbed liquidity from a liquidity candle that we had drawn here, and from 2850 we tapped 2850 and we pushed up. The daily, you can see the rejection and the daily pushed up. We are very bullish. So for the next hour and a half, or 2 hours, or at least an hour and a half, we're bullish. So wait for the 4-hour candle to close. It will close in 30 minutes, 28 minutes. Once it closes, there should be a pullback. Uh, then wait for M15 support to form and take the trade to go up, right? Better M30 support, but it depends on how long price will range to create an M30 candle, to create a 30-minute support, right? Depends. If there's a lot of volume, it might not do that because it's NFP today. You might have price might just create M15 support and push up. Okay. For sells, for sells, the only uh, two ideas for sells. Two ideas for sells, right? So before I go, I'm going to end the stream in a couple of minutes. Before I go, two ideas for sells. If a candle closes above this zone, above the liquidity candle, a bull candle closes, a 15-minute or a 30-minute, ideal 30-minute, a 30-minute candle closes above the zone, and then a bearish candle closes back in the zone and forms M30 resistance, right? Very strong M30 resistance, right? We close, a 30-minute candle closes above this zone, and then above this zone, above the liquidity candle, or above the zone, entire zone, and then closes back inside the zone, forming not a doji, but clear M30 resistance, right? And I've showed many times what an M30 resistance candle should look like. A candle like that, right? A candle like that, a candle like that, not a candle like this. Let me zoom in. A candle like this, or 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 like this, or like this. Any one of these candles, or this, or this, or this, not this. This is a doji, not this. Any one of these candles, right? If a 30-minute bull candle closes above, and then the next one closes back in, bearish candle, any one of those candles, that means the liquidity to continue to 2890 isn't enough, and price is coming back down. That's an opportunity to look for sells. But remember, it's a counter trend trade, so probably risk less than what you usually risk, right? That's one sell idea. And then again, the stop loss for that would be above the M30 candle high, because if price breaks above this, there is no liquidity candle anywhere above. So the stop loss above the M30 candle high that created resistance, and your TP is back at the EMAs, right? That's where your TP level would be, at the EMAs or further down here, you take partial positions at the EMAs and down here, right, at this liquidity candle, because this one is now broken. Yeah. The next idea for sells, if price gets to 290, 2990, and again forms a clear M30 resistance. We touch 2900 and form clear M30 resistance. Then again, same thing. You can look for a sell trade to come down. Stop loss above the M30 candle high. Wait for the retracement. No retracement, no trade. That's for me. Wait for the retracement and then take the trade to come down. Right? Those are the two sell ideas, but it's unlikely. May happen. Those are two sell ideas, but I'm not sure if they'll happen because we seem very bullish. 30-minute candle is closed above the London high and the Asian high, and it seems like this is a tap. We're coming down to create the bottom wick, tap the London high and Asian high again, and continue higher. Okay, we've broken above this liquidity candle. We've closed, in fact, above the liquidity candle. The close is, yeah, we closed above this liquidity candle right here. The high of this liquidity candle is 2873.37. The close of this candle is 2873.48. So we closed above, we closed right at that liquidity candle. So we should technically head higher. So buys are preferred. Wait for the 4-hour candle to close. The 4-hour candle, it might range until then. The 4-hour candle will close in about 23 minutes. Wait for the 4-hour candle to close. Wait for that pullback. Wait for support to form, M15 or M30. Ideally M30, but you might have to take M15 support for price to go up because it depends on how much volume there is today, right? To head higher. TP levels are 2890, 2892, 2900. 2890, 2893, let's say 2890, 2893, 2900, right? But first we need to get to 2880. 2880, 2890, 2893, and 2900. I'll repeat it again. 2880.5, 2890, 2893, 2900. Okay. All right. See you guys on Monday. Back 7:30 a.m. EST, same time, and we'll do our prep work and an analysis. Next week is, I think, CPI. Is that right? Yeah, next week should be CPI. Should be a good week as well. Yeah, next week is CPI. Perfect. Again, just like NFP, high volume week, but CPI is in the middle of the week and not at the end of the week. So again, we can anticipate a high volume week because CPI, PPI, retail sales, they're all three. It's like a triple whammy, right? You got CPI, PPI, and retail sales all in 1 week. So anticipate, we can expect a lot of volume next week. And you will understand, we'll kind of know what volume to expect as Monday and Tuesday goes, right? Because you can see we expected a lot of volume on Friday, a lot of volume today because we saw daily candles make about 400 pips, 390 pips, 400 pips. Same thing applies next week also. If you see Monday, Tuesday have very big candles, it doesn't matter if it's bullish or bearish, but if you see very big candles, 350 pips, 380 pips, 400 pips a day, then it's very likely that during those news events, during CPI, PPI, retail sales, you're going to have a lot of volume during those news events, right? Same logic. All right, enough talking for today. I've done a lot of talking. Okay, we'll be back on Friday. We'll be back on Monday. Monday, 7:30 a.m. EST. Take care. Have a wonderful, wonderful weekend. Right? We are about to hit the first partial close level, 2878. We should hit it. We're about just about a pip, 2 pips away. All right. Take care, guys. See you on Monday. Have a great weekend. Bye bye.